All right, let me get this full screen. So in this video, you have to excuse me, I haven't had my coffee yet this morning. I kind of wanted to knock this out early because I have tons of things to do today, but this is going to be the breakdown of how I got in so early without waiting for the additional confirmation. So once you learn this, the additional confirmations are just going to be, let me make sure my sound's on, because sometimes, there it goes, it is on. Once you learn this, you'll be able to you'll be able to get in early, and then you wait for your additional confirmation and then get in after that. You have to have enough experience to do this, but like I said, the experience just comes with time. So the more time you spend, the more experience you have, right? So let's start off on the daily time frame, because I always start off on the daily time frame. You can ignore the markups in the fib for now. I'm actually going to start off the daily on a different vendor so I can have a more clear chart. Okay, perfect. That's perfect. So essentially, and I wonder if I can make this smaller possibly. No, I cannot. Or actually I can, but I don't feel like going through the settings. The first thing I saw was the fact that Canadian dollar Swiss franc, which I'll click on that real quick, at the time was completely bearish. Make sure these are on the right settings. It was completely bearish, right? You had new sentiment overall neutral, so no crazy news coming out. You had seasonality bearish, which means at this time last year, this was selling, and let's say seasonality just means, and it's a really good way to add to your strategy. Seasonality, you don't have to have prime market terminal. There are different sources that you can have seasonality, even though I do recommend getting prime market terminal, like the 3-month plan. I can't remember if they still have that. So seasonality is bearish, and that means that at this time, in the past 5 years, or so, let's just say 1 to 5 years, it's been bearish. It has a tendency to be bearish at this time of the year. This is a pattern that people, top experts have noticed over decades, that seasonality is a thing when it comes to trading, right? Because the trading markets are on the algorithm is on a cycle, right, of seasonality. So we have that bearish, but retailers are trading its current seasonality, also trading against the banks. You can't see the numbers here unless you highlight it, but they are net short on the CAD 25 lots, because the CAD had, I believe it was, I can't believe it was an interest rate hike or what came out. I would have to go back and look. Actually, I'll just do that now. It's for efficiency purposes. Oh, they're not showing the earlier in the week now, but earlier in the week they had some negative economic news. I can't remember what it was because, like I said, I haven't had my coffee. And the first thing I did notice was this was the last market structure shift right here, when it took out this sell side liquidity right here. Price is going to need to come back up and take out some type of high, right? So it created a high. This is the first lower high it ran above that after taking major sell side on the daily. Price came up, created another high, and then small retracement into this imbalance right here, and then price came up and took out that high too into this order block right here. You could count this order block. Either one of these order blocks will be fine. The daily time frame, you don't have to be perfect. You know what I mean? You just have to be efficient. They're practically at the same level if you look at my crosshair. So you could have chosen either one of these order blocks realistically. Actually, no, you couldn't have, because technically this order block right here got violated to the upside. If the candle trades above it, it is liquidity and not an order block. So just keep that in mind. So price came up and rejected and respected technically the 50% of this order block right here. And this was the last up candle before the move down that had the market structure shift right here. So price came up, took some buy side next, of course, because after you take major sell side on swing lows, you're going to have to take a major swing high, right? Literally going to have to. So you took that swing low right there, and then they're going to have to take some type of major swing high, which was present right here and also right here. So these two swing highs were taken and into this order block to 50%, as you can see. And this is where the other order block respected as well. So they essentially, let me check my phone, it's vibrating. Sometimes it's important. Give me a second. It's not. Okay, perfect. So I noticed that happened. And what really kind of drew me to sell this was the fact that retailers were net short. CAT had some negative news, and retailers were 75% short. So we always trade against those guys. And at the time, those bearish predicted candles. On top of that, seasonality was bearish. Retailers were trading against seasonality. institutions are net short on the CAD. You can see that they're short 25 lots, over 16 lots long, and on the Swiss franc, they're also short because Switzerland is battling inflation, and this is why the news is neutral, because both of them are short, right? But just one's more short than the other, right? There's more short on the CAD than the are the Swiss franc, so the CAD currently is going to fall to the Swiss franc. On top of that, once again, 75% of retailers are buying this pair, and you have bearish predicted candles. At the time, we had no bearish predicted candles, but now we have one on up to the 23rd with a low of 0.66362, right? So that's even more context. So this is what I kind of was looking at on the daily, pretty minimal, right? So now that we got the daily explained, after that I dropped down to the hourly. Let me go back to my markups. After that, I dropped down to the hourly, and what I tried to do was I tried to go daily time or A1H time frame Fibonacci confluence from basically this hot swing high right here, because I started it off kind of like where that daily order block would be. So technically, I would be, if I was to mark up the daily order block real quick, and you can see how you have to use the daily in order to get your entry. So this is what daily buy stops right here. They were taken, as I showed you. There's this swing high into this order block right here, and inside of this daily order block, there's a 1H for a value gap, right? So just for some context, so inside of that daily order block, I looked all the way to the left, and I looked relative to the last major sell side take, which was right here. And there's also displacement, right? So you had the high created, price came down, took a stab at it, actually. So you had displacement lower and displacement higher, but that's not what you want when you're looking for shorts. You want displacement higher and then displacement lower. This is a long situation. And as you can see right here, it traded below the swing low and displacement lower on these wicks right here. And then it traded above the swing high, which is displacement higher. After that, what happened? It respected the buy for a little bit, but eventually ended up selling off, right? So with that being said, you can see cleaning in here, terrible. Oh, it's fine. It should be done in enough time. Or I can move to a whole different place. Give me 1 second. Area there. Let's see here. Give me 1 second. I wonder if it's cold outside. Yeah, no, it's pretty chill. It's decently chilly. It's not really preferable. I only brought my thermal today. It's just now warm in here. I'm bouncing back and forth between Minnesota and Miami. So anyways, I also had 1H imbalance just above the daily, just inside of that daily order block. Essentially, I saw this 1H imbalance that had already been above the daily liquidity. So relative to that structure break right here, major structure break, I knew price after the market structure shift right here. Sell side, when they were showing me that they were chasing sell side right here, and they broke this, and they broke this as well. It's two confirmations in one, essentially, when both of those got taken, that they are indeed chasing sell side. So now anything that's a lower high, right, to this kind of impulse move down, or kind of its new trading range right here, is going to be taken. As you can see, all the way up to this point, it was taken. Price came up into that 1H imbalance. It mitigated it perfectly. And after the initial mitigation, price came down. And this is when that became a strong high. And let me mark that up. I actually forgot to add that as well. Sometimes you have to organize these. And this is a strong high. So that high is not likely to be violated. Why is that a strong high? Because it took buy side liquidity, major buy side. Look at this major swing high. Impulse move started here, ended way down here. And that ended up getting taken too. So major swing high was taken. When I say swing highs and swing lows, I mean liquidity is on the swing highs and swing lows of the chart. Let me actually do this. And we'll change the color to something more bright. Liquidity is on swing lows, major swing lows, and major swing highs, above and below, right? Not the small things in between and everything, right? And I mean, it's the small liquidity in between, but only in phase 2 of liquidity of the trend. And I'll go over that soon in more detailed stuff about liquidity as well. So I do expect this high to be taken, and even this high right here. So as price came back up and bought all the way up, and you can see that it took out major sell side right here in this area before it bought up. And then you could have taken this long if you wanted to. You have to know when the market's doing what. If there's a retracement coming and you just took out major sell side, you know that you have to wait for price to come up to your POI, buy it up. Zooming in. So at that point, I looked and it did not respect the 79% fib level. Anytime that happens and you are still short, and every other confluence is pointing to short, like the strong high, the fact that it took buy side into an order block, the fact that retails were majority long on this pair, the fact that they were trading against seasonality, the fact that the banks are net short on the CAD, the fact that fundamentals right now with the CAD are the CAD's falling to the Swiss franc for now. That all lined up, right? The daily was in premium territory. The daily took buy side liquidity. And after it takes buy side liquidity, it literally has to shoot down to chase sell side liquidity, right? So if we're overall short on this pair, that's an easy sell based on the daily time frame. Buy side liquidity take. You can also do the same thing on the 4H for entry, and my bad, on the 4H for a higher time frame reference. If you're looking to enter on the 15-minute, I would recommend that correlation. And then 1 hour to 5 minute. If you're entering on a 5 minute, do all of your analysis just like you see me doing on the daily and stuff like that. But on the 4 hour, drawing your zones, drawing liquidity that's been taken, all of those things, right? You're gonna need to do that. So I use two things. I use Asian session highs still, and I use ICT kill zones as well. I like to keep my indicators to a very minimal, but these are just assists, right? The ICT, I've already explained the ICT kill zones in the education, so I won't go over that again. But at the time, we were on this kill zone right here. This is the yellow is London, and the blue is New York. London liquidity was taken. That happens pretty much every day during New York. London liquidity, there's always a move up or down in pro trend, but then after that, that same high or low that was taken that maybe shot up, or after the proper liquidity was taken, like let's just say your long low was created, took major sell side, you had bullish liquidity shift, displacement higher or displacement lower than displacement higher, all of that. And then you got it on the imbalance or something like that, or maybe a BPR, which I still have yet to do a video on. It's coming. Then you have a long setup right there, just like that. You know what I mean? You have to wait for the confirmations and everything. So the kill zone was respected. They didn't trade above the New York kill zone. Once the New York kill zone, which is in blue right here, was established, I knew all the liquidity was taken, and I was pairing that with the daily time frame stuff too. So this is the red and thicker line is daily buy stops that I just moved. So price is going to come up, and you're going to mitigate that. And you're going to have Asian highs taken. You're going to have a turn sweep sell. This is me letting me know this is going to be a non-Fibonacci sell. Sell is still valid, but it just exceeded the 79% desired optimal trade entry, which is not a bad thing. But if you want more context and confluence, it's easier to have. It's not all the time. Like I said, you're gonna have some days where you just don't have it, and it's turbo sweep buy or sell. I'll have to do a video on that as well. So couple of topics, like at least 3 or 4 more videos coming out in the future for that. I'll probably try to get at least one of those videos done today. So we have the 1H happening, right? And on the 1H, what I'm looking for is some displacement. So I'm gonna turn these off. That was the kill zone part, and this is the Asian session part. At the time, you can see that the 2 blue lines are going to be Asian session lows right here, Asian session high right here, and that's the middle of Asian session. At the time, price did come up, take Asian session highs into that 1H imbalance, which happened as a result of the daily taking its own buy side liquidity. So all of this price action up here was a result of the daily candles coming up to take that buy side, right? Displacement higher happened, right? So you have kind of like it's going to be a little bit of a longer video, by the way, maybe 30 or 40 minutes. So you have Asian session highs taken, right? You have all this context and confluence, Asian session highs, ICT kill zone. You have data when it comes to retailers and things like that. And from a technical perspective, you have tons of confirmations here, liquidity rise, right? The price did come up, and what I look for is this for displacement. For example, for a short, you want displacement higher and then displacement lower. So if price is coming up, right, the first thing it does is create a swing high and a swing low right here. When you are short, price will come for that swing high. Even if it's already in your POI and it has not came for a major swing high, it's going to do that next, right? Swing high is taken, and this is where most people get in too early right here. I know I'm guilty of doing this sometimes too. Comes into your POI. Price comes into your POI. Let's say this is your POI, for example, right? Price comes into your POI, you're thinking like, yeah, I see a bunch of rejections, but it has not, there was not any displacement yet, right? Let's just say this is a 15-minute for order block or something like that, right? Price comes into your POI, you're thinking, hell yeah, this is a sell, right? It even took some liquidity to the left, right? It still has to have displacement if it hasn't already. So what price will do is displacement, normally stopping you out. Displacement higher is if you enter prematurely. Because they trade stops. So if your stop is there and you got it on the wrong side of liquidity, this is what's going to happen. Like I said, I'm guilty of this too. It happens to me all the time. Sometimes I do not see the displacement, or I'm not patient enough to wait for displacement, right? So what will happen actually, and what you should wait on for shorts, right? You're gonna wait for this high to be taken, or you wait for this high to be formed, swing high right here and swing low right here, right? Where is the tool? And then at that point, you still have no displacement, so there's no trade. Displacement higher, you took out that swing high right here, and normally at that point, I will put buy side liquidity right there, or some sort of marking saying that, hey, liquidity was taken right there on a major swing high in my POI, right? Sometimes it's before your POI. Sometimes the price has not made it to your POI and you get displacement into your POI. That's also another setup, and that's essentially what happened here with CADCHF Frank. So you had buy side liquidity there, and then you got to dupe this, and you're gonna expect sell side liquidity to be taken down there. So now you have displacement higher confirmation officially. And the context of this not going higher, not just taking out buy side and then this be a new bullish dealing range and then price coming down and you're like, heck yeah, I got into the trade and then it going like this because it's actually bullish, is the fact that you are all of the other predetermined factors that you've already marked out for this being bearish, right? So you have displacement higher. After you see that high taken out, you can get into the trade. Wait for some price action. Normally, there's the 15-minute order block would be reacted to very nicely, and it would be quite obvious. But then after that, you're gonna have displacement lower, right? And that's your displacement, and that's what that looks like. So I usually put it right here, displacement higher. I'll put it on the actual end of the actual trend, end of the bullish trend. When it starts to kind of trickle down, that's when I do displacement higher. That's when I know officially the displacement has been there, and then this obviously is going to be displacement lower. And now you have a trade. So what you could do is you can get in early when you see the price action, right? And let's just say this is your ICT kill zone for New York, right? It's blue. That's your kill zone for New York. Kill zone respected. Displacement higher happens. Price is rejecting from kill zone, and then you can sell market execution or something like that right here for a short. And then for a secondary entry, if you wanted to, you can do the good old traditional of what I've taught you. And your second entry could be at an imbalance, right? Somewhere, let's just say, for example, in premium territory. So price comes down, boom, comes down, and let's just say it doesn't smash your first TP, but you're going to go for like 4%, right? It almost gets there, and then it retraces, and now you have an imbalance or VPR or order block, for example, right? That you can get in on, and I can honestly put my stop loss just behind the kill zone and pull this for an extra 3%. You know what I mean? So now you have a situation where, and I'll show you this back on the chart in a second, you get to come in for the traditional entry, knowing that it's going to continue down after the displacement, right? That's what that looks like. You should take a screenshot of this. I can move this over. I can make these even smaller. These two even smaller for you guys. So yeah, Asian session high is taken. You got ICT kills on. You got displacement higher right here on the swing high, boom, et cetera, et cetera, et cetera. That's exactly what that looks like. And it gives you an opportunity. And at this point right here of the BPR or the imbalance, whatever it is, you can set a limit order because you already know that you're right on the trade, right? So that being said, that's exactly what happened here. In this case, we had price taking the Asian session highs. We have turtle soup sell showing me that it did not respect the 79% level, but it's not the end of the world. It's still going to sell just from deeper into premium territory than the 79 and 69% optimal trade, or 62% optimal trade entry, right? So what I did was I dropped down to the 15-minute, right? And I looked like, okay, bet. Let me see what the 15-minute has for confirmations, because I like to look for my intraday confirmations before I enter on the 1 hour and 4 hour, right? I actually like to use the daily for my direction, the daily order block, all the things like I just showed you. I like to see Asian session highs get taken, even if I'm swing trading. Asian session highs need to be taken if I'm short. And then if there needs to be some type of institutional footprint on like the 15-minute that I'll use to enter normally on the 4 hour or the 1 hour, I use that as like an area to set a limit order or something like that, right? This is what I did not do this time. I could have done that better this time, but normally that's what I will do, right? So you had a BPR here. It's pretty obvious on the 15-minute that was formed. You had a bullish imbalance right here that had never been filled. Price has to always be balanced, whether it's on the right or wrong side of the market. So there's a bunch of retail orders resting inside this bullish imbalance. So they have to come and trigger those. Price came up, it triggered this bullish imbalance. Those bullish orders as well as the bearish orders right here on the other side of the market. You can see there's a bearish imbalance right here. That's what the BPR is that they're coming to balance price. That's why it's called balanced price range. They have to balance those buy orders and those sell orders on the other side pretty much at the same time, right? So they buy up and they activate those orders and they fill that BPR. This is a new Asian session, so don't worry about it. The old Asian session was over there to your left, like I stated before. Yeah, the BPR happened and then price fell from there, right? A little bit of drawdown, but not much. I had looked and saw that BPR and I was like, yeah, that's going to for sure be filled and continued from. I'm not worried about any drawdown. But prior to that, we had Asian session highs taken and displacement higher. You can see that this major swing high was created before we got to our POI, and after the POI was, was as a part of the POI being mitigated, right, up into that on the 1H, let's just say, for example, you had 1H displacement, and this is how that reflects on the 15-minute. You have this major swing high that was taken, right, into all of that context, right? And now, right, the next thing that has to happen, right, is if this is a swing high right here, the swing low is right here. This is going to be displacement lower, right? Displacement higher, displacement lower, way over here. So this would be a good target for like a 15-minute time frame target if you wanted to. So you can get in trades earlier. In other words, once you have displacement higher into some type of footprint, right? You have to have the context has to be there. You can see how many factors that we had for this trade. And if I zoomed out even, let's go to 1H. If I zoomed out even, you can see relative to the structure break right here, market structure shift, when they took out the major sell side, because before that they were buying, respecting the strong lows were being created on the way up. They were buying. That's how you know market structure was shifted, is when people, when the algo, the banks actually push price below major swing low right here. Swing low, major swing high. Major swing low, major swing high, etc. It just goes like that forever. So the major swing low would be right here, major swing high would be right here. They're coming for this major swing low right here overall. They'll always take the entire range, right? This is a weak low. If this is going to be a short, any low is going to be subject to being taken, and taken very aggressively at that. So whenever you have a draw on liquidity, like let's just say the draw on liquidity is to the upside, your trade should be having high volume, high, et cetera, et cetera. Like it should be moving very swiftly to gravitating towards these targets of liquidity. All these lows right here, boom, 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 boom. It should be, it's Friday though, but it should be, on a normal day, it gravitates very aggressively, like Euro USD, for example, because you're trading with the banks, right? You're trading with institutions. So price should be gravitating very aggressively towards the lows. And you can see that we placed this earlier in the week and now it's almost at TP. We might have to hold it until next week, but either way, it's going to add to our profit for the month, right? So that's kind of my thought process on CAD Swiss franc, right? Those are the things that I looked at after my displacement higher and the Asian session, Asian highs taken and everything else. I decided to sell this on the 1H because of all of the context and confluence. And where I got my context and confluence was in the factors that I just explained, right? So that's my breakdown for that. You have to wait for displacement higher, displacement lower, a swing high to be taken. It's not always not in the POI. Sometimes you'll have no displacement, but it'll be in the POI. And if the swing high that was created like such, I would have expected it to be taken, right? I would have expected this to be taken if this didn't happen, right? So I would set a limit order just above liquidity into the footprint, right? That's a really, really good way to trade, right? You mark up the liquidity, and then you put your limit order maybe 3 or 4 or 5 pips above that, and typically it gives you a very, very nice sniper entry, right? So that's my thought process on caps with shrink, and obviously the target is going to be based on them aggressively pushing towards the sell side down here, right, for 5%. Now it's only 9 o'clock in the morning, 10 o'clock Eastern time. It's Friday. Fridays are normally slow. I do not know if this is going to actually smash TP. I do anticipate being able to get at least 2.5 to 3% out of this trade. So that's my breakdown of that. If I was to delete, let's just say this thing right here, just for cleaner purposes, all you have is a daily order block, daily buy stops being taken into a daily order block, daily coming back into premium territory inside of that daily order block. You had, if this is just from a technical side, you had buy side taken on the daily into a daily order block, the one each imbalance or fair value gap inside of that daily order block. And ICD kill zone, displacement higher, strong high was created, stop loss just behind the strong high. 15-minute BPR for the fill and continuation, and the sell side and the draw on liquidity on the daily time frame was to the downside, as you see. As a result of that being taken, you had them gravitating towards the lows right here. So pretty easy trade, pretty simple, pretty textbook. We are going to eventually, probably sometime today, pretty soon here, actually move stops to break even on Canadian dollars Swiss franc and call it a day, a week on that. So that's pretty much it for the breakdown. Let me know if you got this. If you did not get this, let me know. But the displacement lower would be technically on the 1H right here on the swing low, because the beta swing high that they took was so obvious. So it's right here in your face. So that would be a displacement higher. You have to wait for this to happen before you get in. Same thing with longs, right? You have to wait for that to happen before you get in. So if you guys have any questions on this breakdown, let me know, and we'll go from there. See you guys in the next video.